But at least I know to check for that because I don't know why it doesn't have my microphone on automatically. Anyways, welcome to the charting session, everybody. This week, I want to talk to you all about the massive sell-off we're witnessing. Is the market crashing? Is everything going to be sold off back to pandemic levels? I hear a lot of fear out there. Speaking of fear, let's look at the fear index. Let me pull that up for y'all real quick. So you got the fear and greed index right here, right? Let's just look at the, oh God, what is this? Let's look at the overview of it. We're in fear right now. We're almost to the level of extreme fear. This is according to CNN Business. This is their fear meter. I like to come here and check on the greed or fear level of the market. Just I think about a month ago, maybe early July, we were near greed. After July, let me show you the timeline though. Let me show you how useful this could be. So we were in greed as of July 15th, right? And as 16th came, we were still in greed. But then we went neutral around July 18th. Back into greed on July 22nd, but neutral. And we dropped straight into fear after the 22nd. The 23rd gave us neutral. And where did we go to fear? The 24th, we dropped right into fear. Right? We went back up into neutral again right around the end of the July. But right here would have been a good signal when we saw this decline right here from greed into neutral. And it didn't seem like it was kind of peaking out anymore, especially being that we were in 75 greed level before. This will be considered like a lower high at this chart. If you were charting the fear and greed chart, you will see that the 60 right here would have been a lower high. Then we had another high come, and it was right around that same 60, so it kind of double topped right there. And now we're seeing a decline into fear. So right around July 15th, when we saw that decline into neutral on the 18th, probably would have been a good time to look to shift into puts. That would have been an early signal for that. And let's look at the chart. This is SPY I got up. So SPY, this is the week of the 15th. Look at that. It printed a 3 candle. I don't know how many people are familiar with the strat, but we're going to go over some of the strats. I'll tell you what these 3 and 2s mean and the 1s. But right here, essentially this means, I'll tell you the 3 right now, means that it went above the high of the previous month and below the low of the previous month. So we got that action going on right here, causing that. Well, that was the signal. That was the early signal for us on the 15th, where we went from greed to neutral, and then we printed an outside bar that also confirmed that we having a little pullback. If you still weren't sure, you could have waited to the next week. If we broke below the previous week's low, that would have been confirmation right here that we're probably going to continue pushing down. You could have jumped in some put option plays right here, or took profit off the table if you were in some, if you have SPY as a long position or some SPY calls. You could have looked to cut your profit right here on those long positions. Market always gives out signals. You just always got to be watching. Pioneer, what's going on, man? I didn't see you jump in here. Let me share my screen with you.
Yeah, I was supposed to hop in when you first started, bro. I just finished this exercise, bro. I had to take a shower, shit like that. What you charting right now?
Right now, I was just looking at the fear and greed index, and then I was looking at SPY as well. I just started looking at SPY. I was looking at the weekly chart. I really want to look at the monthly chart and weekly chart on a couple of different stocks, get that macro vision to step back, because when things get a little hectic in the market, you got to step back sometimes and see what's really going on and where opportunities are going to lie, where the best opportunities are going to lie. But yeah, I was just looking at the fear and greed index. I was showing how we just entered into a heavy level of fear after being in greed for a good amount of time. So the greed and fear index, let me pull it up for you so you can see how it looks. So yeah, this is the fear and greed index right here. And I was just going over how right now, you see, we almost into extreme fear. When you get in here, that's when you really want to be buying. I don't care what anybody tells you. This is the time to buy. Last time we were in this extreme fear was around the Corona time, and we had that crazy dip in the market. As you can see, that was the time to buy, not to be selling. So we were just in greed not too long ago. If you look at the timeline, I was showing how we were making lower highs on the greed fear index. Right around here at the peak, we were at like 79, extreme greed. That was around the beginning of March. And then you go ahead. Honestly, these are usually the times when we get into extreme greed. These are usually like signals that, it may be a good time to start taking profit off the table. Greed, you can still rock with greed, but extreme greed, you probably want to start looking to take some profit. Markets are probably hitting all-time highs around there. But we dropped down into fear for real quick in April. We bounced back out of that. We came back up into greed. But when we came back up into greed, we came only up to 65. Before we were at 79. Then we dropped down again into fear. And we came back up to greed again. This time we came up to like 65 instead of 69. So we keep making lower highs, and now we're dropping off. And now we're all the way deep into fear, making lower lows. Because this is a lower low than our last fear drop, which was 39. So this is a good signal on when to shift into puts on your option plays, and when to maybe dollar cost average into some of your long positions that you may be in. But let's get
something that you look at for more long term, right? Like probably a contract a month away from now.
For contracts, you can actually look at that for short contracts too. If you see the fear greed index shifting into fear pretty heavily from day to day, and you see that transition taking place, you could look at some option contracts. And you also want to correlate that with the chart, whatever chart or for whatever stock you're looking at. Because just because the whole market is in fear doesn't mean that particular company you're looking at may drop. If you're trading the ETFs like SPY and the Qs, you probably are more likely to correlate the fear greed index exactly with what's happening in the market. But you could be trading something like Apple or individual stocks like Google. Like, yeah, they may eventually get caught up in that fear, but the correlation is not always super tight with individual stocks in the fear and greed index. That's better for like ETFs, especially like SPY and the Qs. But I want to look at Intel, because Intel went through it. This is the monthly chart I pulled up right here. So if you look at Intel on the monthly, let's say this is back to 2022. This goes back to December 2021. So let's say this is from January 2022 till now. I had a level on them up here. I don't really trade Intel heavy, which is why I brought them up, because I don't have a whole bunch of levels on them, and we could set some levels and possibly see a good time for re-entry into Intel, or a good sign that you should stay out if it remains below a price. So for me, I like to look at the wicks. Let's turn the strat off for a second so people aren't distracted by the 3 2s and 1s. We'll go over that maybe this charting session, or maybe another one. But right here, just looking at the monthly chart on Intel, we're going to say, all right, we had a peak out around this $50.76 level. That was a level I set as a heavy resistance based upon it resisting back here in March. You see, this is called a high wick. So whenever you get these long candlesticks, I'm streaming live on Twitter too, so that's why I got to do a little deeper explanation. I don't know who's watching, what they may know. But with the wicks, this is showing that the price pushed up here and attempted to close, but it wasn't able to. So it closes where the body's at, but the wick lets you know that the price attempted to go there. So I saw resistance back here from March and February 2022, which is why when we came back up here in December, I kind of saw this as being a resistance level. If we broke above it, it had a good chance of breaking out. But from the whole year, Intel's been on a downswing. And watching it from macro vision, you probably would have saw this drop coming had you been watching Intel closely on a monthly and weekly chart. You could have said that you would have saw a drop coming in Intel as soon as it got below $29.82. So that could have been your signal to enter into a strong put right there. And that actually didn't let me see, that's the weekly. Let's look at if that happened in any day during the week where you probably would have got the entry. Yeah, I got a level at 31.35, so that would have been a good entry for the puts right there once we broke below this support level. And you could have just rolled puts all the way down to where it's at now. It's all the way at $21. It's actually all the way down here. That's a crazy drop. But you would have signaled your entry, at least would have been signaled if you took this level back here, 31.35, which is the The 50-day moving average, once it broke below that, that could have been a signal to jump into some puts before earnings even came out. And then the day of earnings, as you saw it dropping before the earnings came out, I think they came out post-market that day, right? Yeah, they came out post-market. You could have jumped in a put right here and really ate well off of that drop. But you can't catch them all. But when something like this happens, it definitely raises a red flag and brings my attention to want to do some levels on this. So my monthly levels, I have certain colors. So my monthly levels, I try to put either in like the dark red or dark orange color to identify them from my weekly and daily levels. So for this one, we'll do dark red for my weeklies. And I'm setting this level here because now, like I told you guys about the resistance in the wicks up here, you see right here we had a support level set, and up there it was resistance back here. So once it broke through this level, you see it broke out. And when we break down below this level, it's broken down. How far down we're going to go, I don't know. I'm not playing puts on Intel. I'm looking for more so when it starts to recover. I want to catch it on the recovery rally because this was a heavy sell-off for a large company like Intel. So we'll put another level right down here. This is going to be because it's testing these bodies down here. So you got 1, 2, 3 touches. I like 3. 2 touches on a monthly is good enough for me, but 3 touches is even better on a monthly because you got to remember this is a whole month worth of price action. So this is showing that this is definitely a heavy level of support. Right here at 24.71. That could be a first signal that Intel is recovering if we get back above 24.71. And then you could look for your second signal. If you want to be an early jump, you want to jump back in early, you could test it around there, but that's really risky. You could lower your risk by waiting until we get back above this 29 level. I honestly wouldn't even enter until we clear this wick right here. Or even potentially this wick right here. But you could catch a lot of gains between here and there. So this would be my preferred entry. So if I'm going to do an alert, I'm going to put my alert on Intel right here at $32.44. All right, this is a monthly level. As you see, it kind of resisted back here in March of 2023. And then it broke through, and that's when it went on that crazy rally back up to its previous highs. So we'll look for Intel to get back above this 32.44 level. My call entries, I like to mark them as green on my chart. Try to color coordinate your bars so you know what each one stands for. You don't get confused when you're looking at all the levels on your charts because, trust me, these lines can get real crazy after a while. Especially when you back out to macro charts. When you're trading off the 15 and 30, it doesn't look too bad because you see 1 or 2 levels. But when you back out, you're like, oh shit, look at all these levels I got. But yeah, so we'll put that as a monthly support. 24.71 as an early signal for Intel, but entry 32.50. Then we'll look at the earliest resistance I see us facing on a monthly level. If you're using the strat, you could go with the previous month's top wick, which is a decent level for confirmation that the breakout is going to continue. That's why a lot of people use this strat. So we're going to put a monthly level there. Like I said, make that dark red level so I understand that's a monthly. If you want to even take it to the next level, I don't know how many people out there use TradingView, but I like TradingView. I know you could label your levels. So even if you do the color coordinating, you could label it as well to just remind you in case you forget. And then it'll say right here for you monthly level. Just got to double click the level for that text box to come up, and you could do that and put whatever kind of symbols, whatever helps you remember that this is the time to buy. Alright, and then we're going to go ahead and scan over. Remember I said 2 touches or more on the monthly bar. We'll get rid of these levels right here. These are gray, so these must be some intraday levels I had set when I was looking at Intel one day. Let's get rid of that. We'll come back here. Let's look at, alright, we got our entry, $32. $37.14 will be our first area of potential take profit if we enter an option Or if we buy shares around here, you could say if it clears above here, this is where your dollar cost average in and buy some more shares, because we're more likely than not going to continue to rally and break out at least till this level at 40.08. And now these levels you set on this macro chart, and like I said, when you're on the 30 and 15 minute on a daily, you may not see these monthly levels every day as you trade, but when you come upon them, it's going to be a heavy signal for you that, okay, this is the time I want to buy in or clear or take your profits. But without these lines and signals, you're out there really gambling and playing a guessing game. We don't want to gamble in the stock market. We want to be sure. We want to be as sure as possible. There's no 100% guarantee in the market, but with these indicators and your levels, they increase your chances. So that's why we do these Sunday charting sessions every week to prepare for the week and prepare for even a long-term trade if I don't have long-term levels set on the company already. Me, I already have a lot of levels set on a lot of my long-term companies, so I'm trying to find some high-volume trading companies that I could find levels for you guys on that I don't already have 1,000 levels set on my chart, and we could do this together. Always feel free to message me and let me know if there's a particular company you want me to chart, and we could get that done as well. Let's look at here. So 37.14, which is actually right near the 50-day moving average. Oh, actually, hold on. This is a monthly. So let me see my moving averages on the monthly. What is this average? What is this measuring? With the yellow line. Hold on. For the monthly, how do I got it set up? Oh, wait, hold on. Where is it? Oh, here it goes. Okay, so this is a 10-month moving average, and I got 24-month. So I guess I put 10 months to be less, right, a little bit less than a year, and 24-month will be the 2-year moving average. So this will be, like I said, the 10-month moving average on that yellow line is where we're going to be looking to either take profit or dollar cost average in. If I'm in a call option, I'm probably going to be taking profit right here. I'm not going to lie. But if you're a long-term holder and you want to hold Intel long-term, this is probably be a good area to dollar cost average in and look for that continued rally to the upside. Next level above there for Intel, let's look at the next monthly level. Like I said, I want 2 or more touches. I usually prefer bodies to wicks when I'm setting long-term monthly levels if it's not a trading level, like an option trading level. So for me, this wouldn't be a strong enough level, even though we do see a wick right here and the top wick right here on this candlestick. I don't like that because look, it cuts right through these bodies. These bodies blew right up and down right below those levels. It doesn't really show any real support or resistance. You have more resistance right around this first yellow line I got right here, but we're going to turn this into a monthly, so we'll put it right at the top of this red candlestick right back here where it faced initial resistance, and you see it came all the way back up here. It kind of closed around that line, and when it closed above it, it took off, and when it came back below it, it broke right back down. So this is another good level at 44.68 for Intel. And if we get back up to there, we could do some reevaluations. But on a monthly level, this is how you could set up your monthly chart for Intel. We got levels at $24.71. We got the $29.83 level, $37 level, the $44.68 level, and we have our entry at $32. So from this entry right here, if we were to get in right there, and let's say we were going to take profits at this first level, that would be a 13% gain right there, which is a pretty decent gain even for an annual portfolio. 13% return is pretty decent. And if we get a nice rally back to the next resistance level, which I will call take profit for sure, whether you're in the long-term position or option, I would look to take profit here because you'll probably get some kind of resistance and chop action here where you'll be able to get re-entry down here if you really want to jump back in. But right here, you're at 36% profit. On an option contract, a long option, if you enter down here at 32, that's really going to, depending on how fast you get there, but you're looking at definitely over 100% return. And then if we get back up to ultimate resistance, you're talking about 54% return. in the stock. So there's a good opportunity in Intel. You don't have to catch it at the very bottom. You still get a 54% return if you catch it at a good, comfortable, lower risk entry level than trying to time the bottom and catch the pivot. Because a lot of people will do that. They try to catch the exact bottom of the stock and say, okay, I'm going to buy it right here. It's at an all-time low. Let me buy it right here. But you have no idea what Intel could do in the next month. Intel could continue to break down and go down and hit levels you never seen Intel at. Intel hasn't been at this price level, I believe, since the 1980s, they said, or something like that, early 2000s. Intel has not been at these price levels in over 20 years, that's for sure. So nobody would have probably saw this price coming during this pullback and said, oh, yeah, this is a low. Or when we got around here, oh, this is the low right here, $24. It won't get any lower, and it went all the way down to 21. And if you bought at 24 and it drops to 21, from 24 to 21, it doesn't seem like a lot, but right there, that's in itself, on a stock like this, is probably close to like a 15-20% loss. Yeah, exactly. Like an 18% loss, 17% loss, which is something you don't want to have to incur and take. Don't do it to yourself. So I'll go from the monthly, then I'll go down to the weekly. Now on the weekly level, you could go ahead and see, is there any time that we could potentially get an earlier entry off of this long pull back up? No. And don't try to force it, because there's nothing back here that shows you any area of consolidation or support that if it or resistance that if it breaks through is going to become support. There's nothing here. It's nothingness. So this could be a very choppy area and very risk averse you have to be buying Intel right around underneath $30 right now. As the months go on and weeks go on, it may form some levels in here that we may be able to see and time entry off of, but as of now, this $32.54 entry level looks like prime entry, even when we go down to the weekly. Now we could set a couple weekly levels. Let's go ahead and identify those 3 or more touches. I like it right around. Now, my weekly levels, because I'm personally going to use my weekly levels in my strat, I'm going to set them off of the wicks. The most recent wick, I'm going to look for those levels and trying to trace them back to see how many levels they may touch. So right here, we got this wick, this high wick right here at 35.49 on a weekly. And I'm trying to back trace it and see how many levels it touches through. So let me put a line there, actually. We're going to make this orange. Remember the color coding. All right. So as we see, this did serve as a good resistance / support level back here in October 2023 and July. And this is what you want to look for. Whenever you get a level, if you're setting a level, especially off of a recent time frame like a daily, back test your level, look back in the time frames, look back on the monthly and weekly and see how strong that level really is and how relevant it's really going to be. So this weekly level shows that it showed strong resistance and support from the time frame of July 2023 to October. So that's a nice little stretch of consolidating around that price, which lets me know this is going to be an area where we may hit resistance. So in my option, the reason I'm setting these weekly levels, because now if I enter an option contract that expires a month away, I can now use my weekly level for an exit versus my monthly. So the monthly levels, if you're trading options, I suggest using your monthly levels for contracts that you got that stretch over at least more than 3 months. That's where your monthly levels are going to be more relevant for you, because now you're giving it at least 2 or 3 monthly candlesticks to play out to or through your levels. Now, when it comes to contracts less than 3 months to expiration, that's when you want to play off your weekly levels. And then less than a month, now we're looking at the daily levels. All right. So right now we got Intel with the weekly level. So I'm not personally going to trade anything on Intel until it gets to this entry. So I'm looking at it more on a macro scale, because I set this level off of my monthly chart, and it's also off the weekly. So I'm gonna look for it. Once we break above this level, I may enter an option contract that expires on Intel like 2 months out, right? I'll give it a 2-month expiration, and I'll buy me something that's probably like a $35 call once it gets to $32. So I'll be a little bit out the money. The contract will be cheaper, But now the premium I'm looking to collect is going to be within that 2 month time frame. So I'm looking forward to hit this weekly take profit level once I enter right here. If I'm getting a contract that expires in less than 2 months, 3 months or more, and I'm entering right here, and I'm getting a contract that expires a year out, then I'm looking for, I may get like 2 or 3 contracts, and my first take profit will be right here. And then I'll look to close out the position right here at $44. I wouldn't wait until this high. I would get out right here and look for re-entry somewhere in between. All right, so let's do one more weekly level here for Intel. Let's go ahead and chart this up to, I like this level right here, I'm not gonna lie. So we got from April, the week of April 8th, 2024, the top of that weekly candlestick. Once we broke down below this level, you see we had a big breakdown in Intel. We went all the way from 38 down to 32. And when we broke above it back here, we went from 38 and it jumped up to 43. So this shows as a level of heavy decisions. A lot of buyers and sellers are waiting at this level. So to the downside, a lot of sellers were waiting here. And then to the upside, a lot of buyers were jumping in here as this was a confirmation price. They were probably jumping in right here because it confirmed entry for them based off of this weekly candlestick right here. So once we broke above and closed above here, a lot of people were probably signaled to enter their calls, which caused this major up rally we saw. But after every up rally, you always have some slight pullback. So that's why I say you got to be cautious and conscious of what time frame you're making your levels on, and what kind of contracts you're entering, or what kind of long-term or short-term investment position you're entering, because that's going to determine what levels are relevant the most for you, or most relevant for you. All right. I want to look at Bank of America too. Let's go back to Bank of America. Let's go to the monthly chart. So Bank of America, last time they hit an all-time high was November of 2021 when they were at $48. That was over 3 years ago. It's typically not a good sign that a company can't hit a new all-time high within 2 to 3 years. It's usually a sign of deterioration, because a good company, like let's say an Apple or Microsoft, they're going to be making new highs almost on an annual basis, unless there's a big recession in the market or for a one-off year. But more times than not, they're going to be increasing year over year. Let me just pull up an Apple chart so you could just see the stark difference. All right, so you see what I'm saying? So if we go back to 2021 for them, Apple was trading around $120 a share. They peaked up, came up to 150, pulled back down to 130, 120 range again. But when we peak back up, it's at 190, down to 160. You see, so it's a constant upswing. That's what you want to see. You don't want to see a chart that looks like a sideways snake or a downward sloping snake. You want to see something that's continuous upward trajectory. And this is a monthly chart, so this is over a long period of time. This is not like over the course of 1 month. This is a long period of time. You want to see an uptrend. But Bank of America, I pulled them up because our guy, Warren Buffett, has gone to $277 million in cash on hand. $277 million cash hoard is what they're calling it. I thought it was more money than that, but
I thought they said like 5 or something like that, but all right.
Like 500 million. I thought it was more money than that, right?
Yeah, I thought that's what they said.
Oh, this
I
was.
thought he was pulling out until September though, because all these companies are predicted to tank soon.
Yeah, I mean, what they're looking at, I think what he's looking at is repositioning pre-election, or he's waiting to see who wins the election to decide where he's going to put his cash in next. So I think people are looking at, like, you see this article here. It's saying Berkshire Hathaway's massive $277 million cash hoard rekindles Tesla investment chatter. So people were anticipating that he's taking his cash out because he's about to reallocate it to somewhere else where he sees more upside potential than in Apple. Because a lot of people are seeing Apple as kind of reaching a peak of their growth as far as being a growth company, they're probably going to become more of a steady growth company, more so than a rapid growth company as they've been over the last decade. They're probably going to be on a steady, slow increase, more so of like an index pace, maybe 5-6%. They're not going to be making those 20% jumps year over year as often because they're already so massive, and their innovation doesn't seem to be at a level where it's creating something so massively different that is like almost a whole new industry they would have to create in order for them to have a rekindled flame of growth again. So right now they're incorporating AI and all that stuff, but they're not the creators of AI. They didn't create the chips, so that doesn't really give them any kind of major growth advantage right now, like Nvidia. So I wouldn't be surprised if you hear Berkshire Hathaway goes into cash for a little bit. Then post-election, you hear he has an Nvidia position that he went into heavy, and he increased holdings in something like Tesla, and then they bought a little bit of Bitcoin too. even though he hates Bitcoin, I swear, Warren Buffett is on his last legs. All right, he's on his last few years here. I would not be surprised if there's someone else that's in the hierarchy of his company that is going to be in his ear telling him that, customers are clamoring for this Bitcoin. They want us to hold some portion of Bitcoin in our portfolio. So that pressure is going to be applied. Him being his age, if he was younger and more in his prime, I'll probably say, yeah, he's probably still going to stay away from Bitcoin and focus on other value investments, more so like commodities. I saw he went into that oil company that he invested into? I forget the name, but he is looking to go into some more secure assets. It seems like he's shifting away from tech a little bit, but he shifted out of Bank of America too, and I can understand why, because we're looking at this monthly chart. I would get out of Bank of America too. This was actually the perfect time, right around here, and if he was doing it based off of technicals on the chart, he would have timed his exit perfectly right there at 43.65. And big companies like Berkshire Hathaway, they don't sell all their shares at one time. I don't even believe they're allowed to do that. So he scales out his position on like a weekly basis. So at the end of the scaling out is usually when they announce like how many shares they sold and what's their new position holding. So he was probably scaling out from the beginning of April or May. He's probably been scaling out of Bank of America and Apple from May, June, in July. He's probably been scaling out a little bit week over week until he made this massive sell-off announcement that he got rid of 50% of his Apple shares. But in order to see that, they don't have to report their holdings. They only have to report their holdings once every quarter. So you wouldn't necessarily see that on paper until they release that report, or unless it is saw on the transaction wire for options or for the shares being sold. They could see it on. It's a lot of transparency with stocks. So if you have the right tools and do the right research, you can see exactly who's selling, who's buying, how much they sold, how much they bought. But in general, people are usually waiting for that release. Let me pull one of the reports up for y'all right now. Let's pull up the 13F filing for Berkshire. So this is the report I'm talking about right here. It's a 13F filing, right? And I believe they should have another one coming out, or should have coming out. Because if this was in, let me see, this was at the end of March, April, May, June. Yeah, so his new one should be out. Let's see, let me see something. Yeah, no, this is it. But pretty much what it breaks down to you here is the value and what percentage of their portfolio this particular company is and how many shares they hold. So if you want to compare it, I like to do comparing it to the previous quarter and seeing what changes they made. So if you would have looked at the last 13F filing, you would have saw that they cut about 13% of their Apple holdings. They didn't remove any Bank of America, so the Bank of America sell was relatively new. They weren't even starting to cut at the at the end of the last quarter. So this is pretty much showing you their financial activity from December 31st, 2023 to March 31st, 2024. And like I said, this is all public information. And when the next 13F filing comes out, which I don't know why it's not on here already. I'm gonna double check that and see. Maybe is it me? Yeah, no, they only got the first quarter. So we'll wait for that next 13F filing. That's usually a big announcement when those reports come out because everybody wants to know what the billionaires are doing and where they're moving their money. But let's get back to this Bank of America chart. I had some levels on Bank.
On Edge follow that Warren Buffett just has like a huge stake in Oxy.
Oxy, yeah, that was the one. That was the oil company I'm talking about, Oxy Petroleum. He had bought a lot of them at the beginning of the year, and towards the end of last year as well, he was buying a lot of Oxy Petroleum, Occidental. So monthly levels. Let's go back. We don't have to go back that far for Bank of America. We'll go to right here. So let's look at. I already got a level here at 38.47, so I must have put this monthly level in already before. And this would have actually been a nice little signal to jump into a put on Bank of America once they broke back down below this level. This is a good put entry signal on a macro scale. I wouldn't get any short puts based off of this. I'll get a long put. I'll get something that's like a month or two out and try to play it down to the next monthly level, which would be 3 touches. Don't give bias either. Don't try to create a level where there is none. There's one right here. So we got our 3 touches, body, and top of this body back here. All right? And you see it even had a little wick right here. So that was a good monthly level right there at 37.58 on Bank of America. That was another good entry confirmation for a put. Let's look at the next level down. I'm going to turn this into a monthly level right here. I probably had set that on a weekly, but it's actually a pretty decent monthly level. I'm just going to make that dark red because I make some other stuff regular red. This is just the process, man. This is the work that has to go on. This is the 10,000 shots that you got to put up in order to really be successful in trading and investing. You can't just jump in this market and think it's going to hand you money. It'll hand you money, but it'll take it all back just as fast, probably quicker than it gave it to you. I promise you that. If you are not studying and setting up your trades properly. All right, so now the next level down, I'm going to look for, like I said, 3 touches. We have a touch back here on the October 22nd monthly. And then we have a touch on the bottom of this body right here on the May 22nd. And then you had a couple wicks tested and reject, tested and bounce. How do I feel about this level? I think that it is legit. Let's go back a little bit. Let's back test it a little bit more. Let's look back. Let's see if it's showing anywhere else. All right. I think I prefer, or I think this level looks like it holds a little more strength to me. The level right here, right around, where was it at? Yeah, the bottom of this body, right near the bottom of this body. It's near the top of this. This yellow level is actually pretty close to a decent area. I'm pretty good with my levels. I gotta stop doubting myself. So we got one touch, two touch, and a wick. I don't really count these mid-body cuts. I don't really count those as support or resistance. But the wicks and the bottom and the bases, I do count as support and resistance. And okay, hit a top wick right here. So that makes me feel a little bit better about this level. And we'll work our way down. We'll do one more monthly level for Bank of America. We'll look at this gap up. This was obviously a major gap up for them back here that led to this rally we saw. So we'll say that is that's a signal level, but there's going to be support higher than that. No, one touch wick down here touches that gap up, and it's near the bottom of this. No, I don't like this level right here. Let me see. I like it more like right around there. Yeah, that's better. So you got to touch this bottom of this body, top of this. It's not really a wick. That's a body. That's the reason why I like that more. If it was like a wick like this, I wouldn't like it as much. But because these are two bodies, I like that, along with the fact that this is right near that gap up level from back here that we took in February 2021. So now looking at Bank of America, well, let's set one level to the upside because, you know, we could take back off. All right, I like this level right here. So we got the top of this body, these two bodies, and then you have, oh shit. And then you have this wick back here, these two wicks that tested it. This two right here, I don't count those. This wick I do count. This wick I do count. So I like this as a resistance at 40.04 to the upside. That could be a signal for call entry. And then we'll measure out a call take profit if that ever happens. But right now, like I said, I think we're on a little downswing leading up to election. So right now I want to scout out some put plays and potential reversal areas where we could catch the recovery rally. But for Bank of America, I think we're going to have a little more of a breakdown coming. This is a good put entry at 36.99. That's a good signal right there. We're on the weekly chart now, so that's why you see more candlesticks. And I'm looking for some levels on the weekly for the downside and upside now. So we got a body touch here and a wick touch here. It's not as strong as I like it to be for a weekly level. Dun, 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 dun. Yeah, no, I don't like that. That's not enough strength. I like this weekly level right down here a little bit better. So right here, this is a base and it had a wick, but weekly that's not enough support for me. I need to see at least three or more strong touches for a weekly, which is why this looks good because you had the body right here, closed right here, you had this wick, and then you had it kind of find support right here. I'll move it up a little bit more even. I'll move it up to right about there. Alright, so if you enter puts now for Bank of America this week, and you enter in a contract that expires next month, that 35.52 level would be a good take profit because, you know, it could find support. It consolidated around there before. If we break down below that, your next take profit on your put would be 34.54. And one more company I want to look at. So we got some monthly and weekly levels set there now. And once you have these levels set, you got to remember, like, you got to put in the work up front. But now once these levels are set, especially monthly and weekly levels, those are sustainable for a long time on your charts. You're not going to have to erase those and redo those so many times unless the stock takes off to a new stratosphere. And then you got to do new levels for the new highs that it's reached. But more times than not, when you have monthly and weekly levels, especially during a pullback, on that upswing, those weekly and monthly levels serve as pretty strong resistance. So you get a lot of chop in those areas before we really break back out to the upside. I want to look at one more. UNH. This is one of my long-term babies right here. This This is one of my long-term 5-year trade call-outs right here. Investment call-outs and portfolio holds. Been talking about Eli Lilly since they were back in like the 300s. Let's go back. Where was Eli Lilly in the 300s? I've been telling the Discord community about them since, yeah, it had to be back in early 2021. Yeah, right around here. Yep, I remember. It's like 370s. But UNH, they're a healthcare behemoth. As we said, the fear and greed index doesn't apply to everything. This would have been one of those companies where you would have seen the market tipping into fear. And in the meantime, let me see. We said July 15th. Yeah, look, July 15th, market was in extreme fear. But look what UNH did. Took off. And this is what I was saying about the fear and greed is good for ETFs, but not individual stocks always. So on the weekly, is this at an all-time high? 52-week high. It's right near its 52-week high. I think this is an all-time high. Yes, it is. Another good sign of a company. We talked about that snake pattern. It's a monthly chart. It's snaking, but it's snaking in an uptrend, continuously going up. It gave us a good time of consolidation from December 2021 up until about this past month of July. It's been in the same price range of 460. It'll jump up to 540 and reject, come back down around 480, 470. But now we've broken out because we've broken above this high. So this is a breakout. Now this is where you will start having to wait until you see certain patterns form to get your new levels at these higher weekly and monthly levels. But for the monthly, we could place, I wouldn't call this a level yet. I will wait to see how this month closes let's see how August closes out. But I got some pretty good levels on UNH already for macro. Let's put this as a monthly level right here. I'm actually going to raise this up because we got a real strong support right around this level. You see you got 1 touch, 2 touch, 3 touch, 4 touch, 5 touches. That's 5 touches on a monthly chart. That is heavy confirmation that you got a price level of support or resistance there. Once you're above it, it becomes support. When you're below it, it's resistance. So right now, it was heavy resistance before, but now it's going to serve as a nice support. So we pushed all the way up to 589. It looks great, right? It might push all the way up to 620, but then we may pull back to 550, and people think the world is ending. But they're only going to feel that way because of how high it went already. But little do they know, this is a monthly support. You're going to know that if you charted it on your monthly chart, and you won't get scared. You actually probably buy more there once you see support holding. Alright, so we got that, and let me get one more monthly level. This is supposed to be an entry right here, this 527. I had this marked green for a call entry. I never took the call. You know how pissed I am, bro? I told myself, where's the weekly at? It was somewhere right around here because I set the level. I said, oh, if we break above, I'm going to take a call. And right here, I should have been buying my call on the week of the 15th. I should have bought my call right here, right when it triggered. And look at that run we went on. I would have took profit right here. I'm not going to lie. I probably would have took some profit right here because that's that heavy monthly resistance. And I would have saw how he reacted. And once I saw we broke above, I would have jumped back in because I would have known we were about to break out. But you can't catch them all like Pokemon in the stock market, man. Especially if you're not on it all day. You can't catch them all. You got to set your alerts so that when you hit these levels, you get an alert. And that's going to be your best way of catching it because you're not watching everything every day. And that's why I also tell people, keep your options list pretty tight of companies you trade options on. Especially if you're a new trader, I wouldn't be looking to trade options on more than like 3 companies when you're first starting off because you got to get used to chart movement, patterns, technical levels, and the different strategies you're going to use. You're going to do a lot of trial and error at the beginning. So stick to 3 companies, learn them really well, and chart and trade those 3. But the same charting concept applies to every chart you're looking at. A monthly, 2 supports, 2 touches on a monthly candlestick at a base top or bottom. Weekly, I'm looking for 3 or more. Daily, at least 4 touches, 4 or more touches. And if you're looking on intraday, like hourly, 30-minute charts, I'm looking at like, I need like 5 or 6 touches at a price level to confirm it as support or resistance. But let's go ahead. Let's go back to this monthly right here. Down. So that's the first monthly support level. We'll say the next support level below that. We got 1, 2, 3 touches, 4, 5. Yeah, I like this level. This entry level I had was a good monthly entry level. I mean, monthly entry level. We're gonna turn this to dark red. I need that to stand out. All right. If UNH pulls back below 527, we'll revisit this. That's high alert. We'll see what's going on with the market. But now let's go get some weekly levels real quick. On the weekly, let me delete these. This is probably for a trade I was looking at. All right. So weekly chart. We have after you do this for a while, levels will just stand out to you. They'll kind of jump off the screen. Like this right here is a level that jumps out to me. Right before this gap up that we took from July 8th to the 15th. I see this was serving as a little resistance right here. Let's put a weekly level in right here. I like this weekly level. So you got a touch right here on this candlestick. We got a wick. It touches through a wick right over here. Top wick right here. You see once we broke through on this area, that's when we had a breakout rally. And next time we broke down below this area, it had a little nice little pullback. But then once it broke back up, another little rally. I remember this was a choppy time for UNH. I didn't know what was going on. But let's look at.
Hey, are those yellow candles reversals?
The yellow candles are inside bars. So the one candlestick. So this is a strat you've seen. So the one bars mean it didn't go above or below the high or the low of the previous candlestick.
I'm familiar. I know the strat. 2s are upward or downward 2s, and then the 3s are engulfing candles.
Yeah. So those ones are inside bars. All right, so we're gonna look. I like that level right there because we had all those touches. Like I said, 1 right here, another candlestick body touch right there at the bottom, at the base, not through the middle of it, at the base. Then we have another wick touch, another wick right here, and 1, 2, 3, 4 wicks right here. Then a body and 2 bodies back here. So that's enough touches on the weekly for me. And we could even move it down some. And we'll see, where was that support at? Where's that support? I'm really looking in this range right here because this is where it chopped a lot. It chopped for 4 weeks before it broke down. So I'm trying to see how many areas of support resistance we got right here. You got a touch back here. Got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, yeah, that's good enough for me for a weekly. And we'll set one more. Let's go up a little bit higher up here to see if we break down below this monthly level right here where it could possibly catch support. You could look for a call entry if we start to catch support around this level. I like it right here. So you got the body right here on October 16th. The wick from the week before. Then you got a wick touch right here, 2 wick touches. Remember this middle body cut through, we don't count those as touches. I like the wicks or top and bottom bases. Like the bottom wick touched right here and it bounced off. Top wick, it tried to push through and resisted. And then right here, once we came through, it just broke straight through once it closed above here again. All right, so we got some levels set now. We set some weekly levels today and monthly levels for UNH Bank of America, Intel. Any company you want the chart, bro? Anything you want to set levels on before I slide up out of here? Pioneer, you there? Let's go look at the Bitcoin chart for fun. Alright, remember we talked about consolidation? What's like Bitcoin doing right here? This is the weekly chart. Bitcoin went on this nasty up rally back here. Consolidated here for a while. What the price was this? 26, 27. We was there for a minute. Let's look, let's go back. Consolidated here for a minute and broke out. Consolidated here. Consolidation is when you start seeing sideways movement. No direct upwards or direct downwards, just kind of going sideways between two prices. Then we had this crazy breakout, and now we have a bigger consolidation right here. Some more volatility. And I see us catching support from my Bitcoin enthusiasts. We want to look for that 53,000 level. I really want to look for entry at 50,000 is my prime dollar cost average in area to add into my Bitcoin position. I'm looking for 50,000, but between 50 and 53,000 in this area, if Bitcoin is showing that it's holding support, then this is a good area to start buying before it takes that next leg up and goes up here to the 100,000 level, and then we'll never see these prices again at 50 and 40,000. We may get 70,000 again if we get to, but I don't think we will get 50% drop once it breaks to 100,000, especially with all this institutional support in Bitcoin now. It's not going to have as drastic of pullbacks as it used to. We'll look at Nvidia next week. I already have a lot of levels on them, but I'll go over some Nvidia levels. I want to look at gold and Eli Lilly next week, and my big boys Microsoft and Apple. We could chart those out. But we got some good levels for UNH, Intel. SPY, let's give a weekly pay for SPY before we get out of here. If you're looking for, let's pull the levels up. Yeah, you see all these levels I got? Crazy. But let's look at, if you're looking for a good put entry, I would say you want to wait until we get below 528.75 on SPY. That'll be triggering you to enter your put. And then you could rock that put out to about 524, 523.50. So you're going to look for entry at 528, below 528.50. You could put a weekly play in down and look for us to get down to 523.50, 524. And then take your profit right around there. That's a simple, straightforward SPY play for you guys. Before I jump out of here, you want more exclusive trades, you want exclusive trade price range call outs like that, you got to join the Discord. I'm bringing you these charting sessions for free, for love and for educational purposes, so you could get out there and put these charts to work for you and give yourself a better chance when it comes to timing your buy-ins on your investments and timing your exits on your trades. So just for an example, market reached an all-time high this week, right? If you were in SPY, like I had SPY long positions, this right here, this 3-bar, which I'll teach more about in my strat lesson, is going to give you a signal that we're probably getting ready to enter into a pullback. If you want to wait for confirmation, you could wait till the next week closes or starts to get below this bottom of this candlestick, and that'll be your confirmation that, okay, I need to get out, or I need to take profit in my position, or I need to not be buying more right now because we're getting ready to go into a pullback. So a lot of people see all-time high in markets. A lot of people get greedy, and that's when the all-time greed was high, where the greed meter was high, when you see all these push-ups. And where people with smart money probably got out, they probably started getting out right here in June. I'm not gonna lie, smart money probably started selling off in mid-June. And this little extra rally you see after is where all the people who were greedy were pushing the market up, but it wasn't really being pushed up by any big money anymore. It wasn't being pushed up by institutions or the Warren Buffetts or Elon Musk. of the world. This was just retail traders and greed. And now the selling that happened right here from the institutional investors are catching up to the retail traders, and it's pulling the market back down. These institutional sellers still right here, they want to buy back in. Best believe they're going to take their profit right here, and they're looking to buy somewhere around these levels down here when we had this consolidation, which is why I personally think by the end of this year or before election, I could see us getting down to SPY right below 420. I could see us getting down to 515 again. From 530, I can see us testing 515 to 510 again on SPY. I don't see us really cracking 500 for too long if we do test it, but 505 to 515 I think is a good little range for you to start adding back to your SPY position if you're a long SPY holder. All right, remember this is educational purposes only. What happened, bro?
I was gonna say, how you feel about the 2-2 reversals? Every time I see a red 2 and a green 2, or a green 2 followed by a red 2, the 2-2 reversals, it usually like goes in the direction. Is that something you stand by as far as the strat, or do you mostly go off of charting?
Yeah, for me with the strat, the 2-bar, like I said, the time frame I'm looking at, the 2-2 reversal, like if you get a 2 up and then a 2 down, like I guess right here it was a 2 up and then it printed a 2 down, but then you see it came right back to a 2 up. So for me, with the strat, the thing is timing your entries off of those wicks is most important, than more important than anything, than trying to anticipate based off of it. Like, okay, this is a 2 down. Let me go ahead and I see a 2 down started up here. Let me go ahead and jump in on it now before I get confirmation for entry right here. Like, no, I wouldn't do that just because it's a 2 down. I will wait for this entry confirmation first and then jump in the trade. But if you get a 2 down, just like pretty much peaked right below this, but it starts catching support right around here. All right. A strong entry, unless you're looking at macro time frames. Like we're looking at the weekly, monthly right now. So if you're looking at this on a weekly, this may be better confirmation than you looking at something on the intraday. So I'm confident in hopping in a put right once we get below this line. But if it was off of like a 30-minute or hourly chart, I'm looking at something like this, a setup like that, I would wait for the next candlestick to close and show my confirmation, close below my confirmation level for me to be like, okay, I'm jumping in this. So let's look at a 30-minute chart real quick. So on this 30-minute, we got, let's say, man, this is 3 down. Let me look at for 2 up, 2 down. Where's the 2 up, 2 down happen? Give me one. Let me look at it hourly. That's near the end of the day. Alright, so right here is a little example. So right here, you had a 2 up, 2 down, right? And now you look at it and you say, alright, I got the 2 down. Mind you, you're not taking entry as soon as you see the 2 down. I always say you have to wait till the next candlestick because you need it to get below the bottom of this 2 down candlestick to confirm that you should even jump in that trade. So if this was a crazy 2 down candlestick and it got all the way down here and went somewhere crazy, then you still want to wait for the next candlestick to get below that wick. And then you want to time your exit based off of a earlier candlestick's wick that you see where it may catch support. But yeah, right here is a perfect example. So you had a 2 up, you had a 2 down. And now if you jumped in on this 2 down thinking that we was going to reverse on the day and go straight down, you could have possibly got caught up in this 1 up, and then you would have seen a 2 up right here. You got caught up in this chop. It doesn't look that bad on the hourly, but you know how it gets when you're looking on the 15 and the 30. This could be a lot, especially if you're doing 1-day contracts or weekly contracts that a lot of people like to do. This move right here, if you bought in a put right here and you got caught in this reversal right here, that could be a 30-40% loss on the contract, and you would have to wait for this. you wouldn't have to. I always definitely say take this, cut the loss, but most people end up holding and hoping that something like this will happen towards the end of the day so they can recover. But now, where I would say the definite entry was when we got back below this wick right here. When we got below this 2 down wick on this 2 candlestick, on this 2 down, this would have been a nice entry for a put. Because now it shows that we went down, 2 down, we tried to test it, it put a 1 bar, it didn't really go down as a 2 down or a 2 up. Then we tried a 2 up. This is what they call a failed 2 up. So the 2 up happened, but it didn't close that much higher than the previous candlestick, or maybe even closed a little bit lower than the previous candlestick. Yeah, this closed at 55.25, this closed at 55.08. But it's a 2 up. It's a 2 up wick. It's a 2 up candlestick, but it closed lower than that 1 candlestick. It's only a 2 up because at one point it pushed above the high of this candlestick, but it still closed below the close of this. So that's a failed 2 up. It didn't close above the previous close. So that was the first signal that we may have a pivot coming. And that confirmation was when we got below 554.25. But this was at the end of the day. You would have to be looking at it like, okay, this is off the 30-minute chart, the hourly chart. What do I see on the daily? What do I see on the weekly? Because you're going to have to make a determination if you're going to swing this through the night. So if everything on the macro charts was showing you